All right, good afternoon, everyone. Welcome to today's tutorial class. This is accounting for beginners for our new viewers. We take accounting lectures and we give tutorials for those writing ICANN exams or those writing WIEG, and then you need some kind of guidance in how to prepare for your exams. I got you. So today we'll be continuing from our previous class. We've done class 1, 2, 3. This is our fourth class. So if you're just joining, you've not missed anything. Just check the previous video so that you can follow through. Now, in our previous class, we talked about debits and credit, the double entry principle. And we also talked about accounting equation. Today's class is going to be a continuation of that class. We're going to be using practical examples to see how you can be able to know if my accounting equation is balanced and how to apply the debits and credits, that's the double entry principle, in your daily transactions. Most people think that debit and credits, which is the basis of most things we do in accounting, they feel it's difficult, but it's not difficult. I'm here to make it very, very simplified. Debit and credit is very, very easy. All you need to know is you need to follow the golden rule. There are golden rules that guide what to debit and what to credit. And I talked about that in our previous class. But I'm going to talk about it again today for those that are just joining me for the very first time. And we're going to be using a very simple abbreviation so that you can remember it easily. So this is how you spell the word dealer. All right. Now, E is for expenses, A is for assets, L is for liability, E is for equity, and R is for your reserve. Now, these two items, your expenses and your assets, whenever they increase, you're going to debit them. Whereby, whenever they decrease, you're going to credit. While for these three, the reverse is the case. When they increase, you're going to credit them. And when they decrease, you're going to debit them. So you can see it's very, very easy. If you know this golden rule, you will be able to know how to post correctly and how to prepare your ledger account and finally your financial statement. This is what guides our debit and credit. When you talk about the double entry principle, like I introduced in our previous class. See, I got you. So accounting is not difficult. Debit and credit is one basic principle that guides everything we do in accounting, amongst other things. But understanding this is very, very important. If you're able to understand this very well, you're going to find out that preparing your account will be a lot more easier. An account preparation starts from preparing your ledger account. This is our second tutor. Preparing your ledger account, and then finally your trial balance, and then your statement of financial position and profit and loss account. So let's talk about typical um, life examples so that we can see how we can apply this. Okay, so within the first instance, we are told that the owner of the business decided to introduce 500,000 naira into his business. What does that tell you? It means that this 500,000 naira is what? Your capital. And just like, sorry, excuse me, take students and your book. And just like we've talked about before, capital is the money to start a business. So now we are told that this owner wants to introduce 500,000 naira into the business. That tells you that what this is what capital. Now, for everything within accounting, we're going to apply the double entry principle, which says that for every debit entry, there will be a corresponding credit entry. Now, in this instance, this scenario, two accounts are going to be affected. And the first account that will be affected is what? Our capital account. Because we've been told that the owner wants to introduce 500,000 naira into the business. That simply tells us that he wants to put in more money into his business, and that is what? Capital. Now, because he has added more money into his business, as the case is, now you're going to also have, so let's, okay, so that means capital account is one account that will be affected. The other account that will be affected is our assets or cash accounts. In fact, to be precise, it's our cash account that will be affected. But cash account is a type of asset account. So now that we've been told this person wants to introduce 500,000 naira into the business, two accounts will be affected. Capital account. Why? Because anybody introducing money into a business, that introduction of money is what? Capital. We know that capital is the amount of money you introduce to start your business, or money you use to start your business. That is what. Come, Dama, come. Ah, this is our co-student. So 500,000 naira is the capital is adding to the business. That is capital. And then it's also cash. Because in as much as it's capital for the business, it's also cash. Do you agree with me? Either cash or bank. So either he goes to the bank and bank the money, or he decides to keep the cash in the office. But whatever he decides to do, bank will be the best option for him. But bank or cash, they are all asset accounts. So the first thing to note is that two accounts are being affected here: capital account and cash account. And that is by virtue of what we are told the money will be used for. The money is being introduced into the business, and that is capital. And automatically it's also cash. Are we together? So now, following our rule, we know that assets increases when you debit. So let me just write that rule for us here a little bit again, so that you can always go to it. So I'm going to use the abbreviation for them. Okay, so this one increases, you debit. When they decrease, you credit. While this one, when they increase, you credit. When they decrease, you debit. Madam, wait. Where's your own pencil that I gave you? I take your own. Write on your own board. So now, by virtue of this, capital has increased. So you're going to credit your capital account. So you credit this capital account with how much? 500,000 naira. And they're going to debit your cash account with 500,000 naira. You see, it's not difficult. By virtue of what you've done, you have recorded the debit entry and the corresponding credit entry. You followed your double entry principle. You've posted correctly. Are we together? Now let's give another scenario. Now, if we're told, for instance, that this same business owner went to borrow 300,000 naira from the bank. So this first scenario is the scenario of introducing 500,000 naira into the business. So this is the introduction of 500,000 naira into the business. Introduction. Okay. Now the second scenario is that he went to the bank to borrow 300,000 naira. So borrowed 300,000 naira from the bank. So once you hear the term borrow, what will come to your mind is what? Liability. Are we together? He went to the bank to borrow 300,000 naira. So the liability. So definitely liability account, which is our loan account to be precise, because he borrowed the money. So the bank loaned him 300,000 naira. Now this money he borrowed is also cash. Yes, and by virtue of the fact that he went to the bank, they borrowed him money. They are borrowing him cash. So the nature of the transaction would guide you to know which accounts will be which accounts you'll be opening. So our loan account is one account you are going to open, and then our cash account is another account you're going to open, be it cash or bank. And the amount is how much? 300,000 naira. So, following our rule, our loan has increased by what? 300,000 naira. And we're told that when our loan increased, what did you do? You credit. So we're going to credit our loan account with 300 naira. And then our cash has increased. Even though we borrowed the money, but our cash has increased by how much? 300,000 naira. So you're going to debit 300,000 naira. You're going to debit it. I hope you can see this. My ink is. You're going to debit that with 300,000 naira. Okay, so you can see that preparing accounts, or rather posting, is not difficult, as you can see. We have our loan account 300,000 naira. We have our cash account of what? 300,000 naira. Now let's do another scenario. So this is borrowed. Let's do a third scenario. So let's assume we have a third scenario where we are to pay rent. Okay, let's say you have to pay rent of, say, 50,000 naira. Are we together? So let me clean this. Let's do another scenario. So we have to pay rent payment, teacher, rent payments of how much? 50,000 naira. Now, by virtue of the information we are told, we're going to have what? Rent account and what? Cash account. Because for the fact that you're paying rent, how are you paying the rent? You're paying it with cash. Whether it's through bank or whatever, you're still going to use cash to pay. So you're going to open two accounts. You're going to open your rental account. Let me get my student a biro. We're going to open our rent account and our cash account. Now, rent is an expense. So our rules is when expenses increase, you're going to debit. So you're going to debit your rental account with the sum of what? 50,000 naira. And then you're going to credit your cash account with how much? 50,000 naira. The cash is reducing because by virtue of paying 50,000 naira, whatever cash you had before would reduce by what? 50,000 naira. Do you understand? So that's why we're going to credit our cash account. So you can see that debit and credit is very, very easy. There is nothing to it. Just follow the rules. For you to know, just follow the rules. And the rule says that expenses and assets, when they increase, you debit. Meanwhile, when they decrease, you credit. Their liability, equity, and your reserve, when they increase, you credit. When they decrease, you do what? You debit. Are we together? So that is all. So I hope that you've understood how to use the double entry principle by virtue of what you've been taught in this class. And you can now post your journal entries. You can now prepare your T account. You can now prepare your statement of financial position and statement of profit and loss account. You will now think like an accountant. Are we together? So this is one step in becoming an accountant. Debit and credit is one thing that gives students sometimes trouble, but with this you can see that it's very, very easy. That is why I'm here, to make accounting simplified for you. If you know you've learned something today, kindly consider subscribing to my channel and also hit that notification bell so you can know when I post new videos. And with that, you won't have to miss any class that I have for you. I want to thank you so much for taking our time to watch this video. I believe value has been added to you as an accounting student. See you in my next class. And in my next class, I'll be teaching you how to prepare your journal entry step by step. Bye. Mama, say bye. Bye, good girl. We're done. Madam Mesoma.